This company brought me a 258% gain in just 3 months, and overall, in 2024, Sezzle, the company we're about to discuss, surged by an astounding 1,439%. Yes, I first bought shares of this company in March of this year, and currently, my portfolio shows a 258% profit. Even despite a minor market downturn caused by the recent clashes between Elon Musk and Trump, this company remained almost entirely unaffected. In the next few minutes, I'm going to give you information about this company that's more valuable than gold. So, don't click away, just sit back, enjoy your coffee, and watch until the very end. Let's get started. Sezzle is a financial technology, or fintech, company that offers, buy now, pay later, services. The company's payment platform allows customers to split their purchases into 4 interest-free, weekly payments. Sezzle's goal is to increase consumers' purchasing power, connecting tens of millions of customers with a global merchant network. Founded in Minnesota in 2016, Sezzle moved to the non-quoted exchange NASDAQ in 2019. Currently, the company operates in the US, Canada, and Australia, with approximately 80% of its revenue coming from the US market. Sezzle has already managed to partner with over 29,000 merchants. This company primarily generates revenue from merchant commissions. Merchants pay Sezzle approximately 6 to 7% of the sale amount as commission, which constitutes the company's main revenue stream. Additionally, customers may incur late fees if they miss payment deadlines. In short, the majority of revenue comes from merchant fees, with the rest coming from user fees such as late payments. Sezzle has also started generating revenue through subscription payments, which we'll discuss in later minutes of this video. According to recent data, Sezzle's gross merchandise volume (GMV) over the past 12 months was approximately $2.9 billion, and the number of active customers reached 2.7 million. In the first quarter of 2025, the monthly active subscribers, MODs, reached 658,000. These numbers indicate that Sezzle is a rapidly expanding platform. Sezzle's total revenue for 2023 was $159.4 million, representing a 26.9% increase. The company closed 2023 with a net profit of approximately $7.1 million, but just 1 year prior, in 2022, it had a loss of $38.1 million. Not every company can manage to turn such a significant loss into a profit. This is a huge turnaround year over year. In 2024, Sezzle further increased its revenues to $271.1 million, which is a 70.1% increase compared to 2023. Revenues grew more efficiently relative to operating expenses. At the end of 2024, adjusted net profit was approximately $66.2 million, which represents a tenfold increase compared to 2023. Can you imagine what it means to increase net profit tenfold in 1 year? In the first quarter of 2025, Sezzle's revenue was $104.9 million, an increase of 123.3% compared to the same period in 2024. At the same time, net profit reached $36.2 million, accounting for 34.5% of total revenue. This rapid growth indicates that the company is benefiting from seasonal sales periods and new products. In 2024, Sezzle generated $40.9 million in cash from operations, but in 2023, it closed with a loss of $25.7 million. In the first quarter of 2025, operating cash flow was $58.8 million, while it was $38.6 million in the same period of 2024. This shows that the company has improved its operating cash flow due to increasing profitability. At the end of 2023, the company's cash was approximately $67.6 million, but in the first quarter of the same year, the balance was $73.2 million, meaning the company's balance decreased by about $7 million from the beginning to the end of the year. However, by the end of 2024, cash and cash equivalents increased to $98.3 million. Sezzle's main debt is a revolving credit line. It had a $100 million credit line in 2022 and $150 million in 2024. At the end of last year, the credit obligation was $105.0 million, but by the end of the first quarter of 2025, they managed to reduce this credit to $70.8 million. This is an extremely significant achievement for a company like Sezzle, having managed to reduce its debt by more than double in a year. At the same time, this debt is financed at a high interest rate of approximately 12.65%, and generally, for a company of this type, increasing debt requires attention to credit risk. Sezzle is currently considered a rapidly growing company and therefore has a high valuation ratio. For example, its TTM/PE ratio is currently approximately 44 and its P/S ratio ratio is around 12. The company's earnings per share in 2024 also significantly increased compared to the previous year, reaching $2.97. Analysts note a high ROE for Sezzle based on the first quarter of 2025, which is 143%. Overall, these indicators show that Sezzle is in a stage of rapidly profitable growth. Currently, the last closing price for a single share of Sezzle on Friday was $132, and the company's total market capitalization is at $4.39 billion. This company's shares have risen from around $11 to $132 in the past 52 weeks, or the last year. Sezzle has recently shown strong seasonal growth. In the fourth quarter of 2024, GMV was $855.4 million, and revenue was $98.2 million. If we look at this in terms of percentages, the increase in total merchandise volume was 42.1%, and the increase in revenue was 100.9%. This increase was due to strong demand during the holiday season. At the same time, the subscriber base, or mods, was reported to have increased to 707,000. In the first quarter of 2025, these figures reached truly fantastic levels, with GMV at $808.7 million, representing a plus 64.1% increase, and revenue at $104.9 million, a plus 123.3% increase. Such upward dynamics show the role of both seasonal factors and new product functionalities. In short, Sezzle's revenue and profit indicators have sharply increased recently, demonstrating that the company has sufficient scale and its growth strategy is effective. Now, let's talk a bit about the risks. The BNPL sector is not yet fully regulated, but this could change in the future. In May 2024, the Consumer Financial Protection Bureau (CFPB) in the US declared that BNPL companies are subject to the same rules as credit cards. This indicates that BNPLs may be subject to stricter consumer protection requirements, operational obligations, and penalties in the future. Overall, regulatory changes increase attention to late fees, debt collection, and other credit risks. It's also crucial to pay attention to competition in this market. The BNPL market is extremely competitive, with many strong players involved. While Afterpay leads in customer numbers in the US, the global leader is Klarna, with other important competitors including Affirm, PayPal, Apple Pay's four-part scheme, as well as new fintechs. According to Hindenburg, Sezzle is lending to high-risk consumers by financing its credit portfolio with expensive funding, around 12.65%. In 2024, debt and credit allocations, or provisions, significantly increased, which increases the company's capital burden when demand grows. It's also important to remember that general macroeconomic conditions deeply affect BNPLs. For example, rising interest rates and inflation put consumers under pressure. For instance, deferred bank loans in the US have increased, which raises the risk of losses for BNPL services. Furthermore, a financial crisis or a negative market shift increases the risk of losses for BNPL companies. Serious analysts emphasize that some of these are risk elements for Sezzle's growth rate. Along with the risks, there are also very attractive opportunities for this company moving forward. Sezzle is adding new features to its platform. For example, Pay in 5, a 5-payment alternative, has already been launched in beta, creating a more flexible payment option. A product marketplace is also being implemented, offering discounts and search tools during users' shopping journeys, and this feature is rapidly increasing order volume. Sezzle is also trying to attract the younger generation and increase subscription revenues with educational programs like Money IQ and balance competitions. The company is forming new partnerships with large retail stores. In late 2024, Sezzle began collaborating with major retailers like Backcountry, Beals, and Rural King. These steps create more sales volume, brand recognition, and revenue opportunities. Sezzle also plans to increase its market share by providing retailers with payment acceptance widgets and marketing support. Sezzle is also deeply focused on technology integration. For example, Sezzle partnered with Visa-owned Plaid in 2020. This integration has enabled easier money transfers from Sezzle customers' bank accounts and reduced operational costs. Such developments both improve user experience and increase operational efficiency in the future. Additionally, Sezzle is trying to establish itself not only in the US but also in the international market. For example, Sezzle is expanding outside the US. The company already provides services in Canada and is preparing to enter the Australian market. Recently, for example, Sezzle raised $60 million to expand its operations in Australia. With these funds, Sezzle aims to gain access to a larger international merchant network, enter new markets, and diversify its revenues. So, What do analysts think about Sezzle? Overall, analyst interest in Sezzle is still low and ambivalent. According to Market Screener, 2 analysts have given Sezzle an average buy rating, with an average price target of $90.50. This is below the current market price and indicates that some analysts do not expect a significant price increase. Sezzle has actually entered this competition as a US-based but smaller player. To gain market share in such a broad market, it's vital for Sezzle to continuously improve its products, service quality, and cost efficiency. At the same time, the BNPL business model is associated with credit risk. Short-term, interest-free loans are primarily given to high-risk customers. Even if the portfolio grows rapidly, if defaults increase, the company's credit losses and damage could significantly increase. Other data sources show higher targets such as $368.50 on public.com, but such differences are not reflected in standard reputable analyst reports. Generally, most reviewers still consider Sezzle a rising player in global retail payments but are cautious in their valuations. In general, if we want to invest in this company, we must pay attention to these 4 factors. For example, how is the company's revenue changing compared to previous years? Consistent and stable revenue growth indicates the company's growth and competitiveness. Sezzle's nearly 100% revenue growth in recent years is a noteworthy factor. The second nuance is the debt burden. How much are the company's debts and interest expenses? If the debt is high, it's possible the company is paying more in interest than its earnings. Sezzle's main debt is a revolving credit line, and this debt is financed at an interest rate of over 12%. The volume of debt, interest rates, and payment schedule provide investors with information about risk. The next nuance is profitability. For example, how much of its revenue does the company convert into net profit? Despite high revenue growth, the main question is how much of the revenue remains. Sezzle's net profit margin in the first quarter of 2025 was approximately 34.5%, meaning 1/3 of the revenue. This margin indicates the efficiency of the business model and the competence of management. The last nuance is the valuation of the shares. What is the company's market capitalization to its revenue (P/S) and to its earnings (P/E)? Lower P/E and P/S ratios can indicate that the company may be potentially undervalued, while higher ratios suggest higher market expectations. Sezzle's P/E and P/S ratios are currently quite high. Analysts look at these ratios when making investment decisions to understand whether the company's price is fair or excessive compared to its earnings and revenue indicators. These 4 factors, revenue growth, debt burden, profitability, and valuation, are key indicators of a company's financial health. In the case of Sezzle, it's important to look at how high revenue growth, which Sezzle has, debt management, profit margins, and the realism of the company's market price are developing. By considering these factors, investors can assess the company's overall financial health and investment attractiveness during fundamental analysis. So, what do you think about this company? If you're interested in in-depth analyses and investment opportunities like this, be sure to subscribe to my channel so you don't miss the next video.